Good morning, folks, and welcome to the second episode of Fintech Insider Breakfast Show, a new show that from the folks from 11FS, bringing you the breaking news and fintech banking landscape every day at 8:30 GMT. We're getting up early to make this happen. So the idea is that what we're going to be doing is giving you guys are going to be sort of cooped up for, well, I don't know, months, years. We just don't know at this stage. What we're going to try and do is give you something that can keep you entertained and informed in the way that we always do with Fintech Insider. So every morning at 8:30 GMT, we'll bring you the latest in breaking news and anything that's been going on around fintech, or to be honest with you, just something that we really want to talk about. So it will be me and it will be people from the 11FS family, as well as others around the industry that will rope into this. Literally put out a LinkedIn on this, put out a tweet on this yesterday. I think I've got enough people now for about 2 years, so we're good for quite some time. But today I'm joined by the one and only Mr. Simon Taylor. How's it going, Simon?
Yeah, really well, thank you. All things considered, I'm hoping that R2D2 in the background becomes a bit of a regular, and now to R2D2 for the weather. Could be.
Do you know, I'm trying to teach him to go down to Sainsbury's and get bread because it's probably the only way we're going to survive this thing. But my programming skills is not what it used to be. So where in the world are you, Simon? For everybody who doesn't know.
Living in Romford. Havering is the borough in London, so technically a London borough. If we end up in lockdown, technically we'll be locked down. So yeah, living that flat dream. Already ordered the new furniture for setting up an office, so getting used to it slowly.
Do you know, if there's only one person who's benefiting from this, it's probably Amazon, isn't it? At this stage, the amount of random things people have bought. I furnished my office behind me with like gym kit because I was like, look, if I'm gonna be stuck inside for 3 months, then I want to get fit while I'm doing it, basically. How are you guys holding up over there? I mean, have you left the flat in a few days? Because I mean, I've literally
Not in a
been.
while. No, yeah. My wife had a bit of a cough and a sniffle. So just to be safe, we've not really left much. And I've just basically been out for groceries here and there, which has been kind of interesting. You get to the supermarket at certain times of day, and it is like, whoa! It's turned into Supermarket Sweep for anybody who remembers that TV show. You just kind of run in and grab the eggs. Eggs appear to be the thing that everybody wants in the apocalypse. So
Oh,
that's what everybody's going for.
I miss Delwynton, don't you? Like, just it was a great
Simpler
thing.
times. Simpler
Yeah, it
times.
was. A few people joining in now. So, hey, Paul, how you doing? Good, thanks for joining in. Mary Ann, thanks for joining in. Joe Parkins saying go Romford. So it's good to see Romford is getting some love here, and actually all the way from Australia as well. Matt Tavani, how's it going, mate? I haven't spoken to you for years, but yeah, thanks for everybody for joining. What we're going to try and talk about today is, I mean, a story that was over on American Banker, which is super interesting. So this is coronavirus throws digital. I mean, you knew coronavirus was going to be in there somewhere, right? I think we'll try and distract you with something fun later on, but I think for now we're going to have to stick to the coronavirus stuff. But coronavirus throws digital banking into the crucible. So the gist of the story over on American Banker, written by Jim Dobbs, really interesting article, is that the outbreak of corona over in the US might finally be the thing that actually puts the nail in the coffin for branches. So they did a study that said, given the mindset of people amongst a sample of, I think it was about 1,000 people that they sort of talked to, 82% of them said they would be concerned to go to banks, which I'm like, yeah, like obviously. I mean, literally in some places, they're literally telling you not to do that. 73% of people said they're doing much more remote errands. 63% more likely to try a digital app now, and 56% worried about being able to repay loans. So, I mean, all of this kind of leads to, I mean, something I guess, Simon, we've seen in other geos as well, which is, I mean, in times of crisis, then people use the tools that they have available, and digital banking and remote access for these things is available to everybody. So, I mean, do you think this will be the thing that finally tips the scales?
I don't know if it tips the scales, but it certainly moves digital from that sort of nice glossy app into the only way of doing business. It turns digital into the new business as usual. It used to be that the branch was business as usual and the app was for them young millennials types. And there's something nice about the focus that this has brought. It's a shame it took a crisis to do it. But you think about the amount of vulnerable people that could make a difference for. if we're able to give them the support they need to be able to get into digital, it could be really important. I mean, the one that stood out to me was 82% are concerned about going to their bank. The US has always been a market where it's had this really strong history of community banking. The branch is a pillar in the community. How that becomes digital and how that sort of goes beyond, here is a list of your recent transactions and here's how you make a payment. It's going to be interesting to
Yeah.
watch.
It is. I mean, it's going to be fascinating. So many people kind of joining this morning. So, hey, Effie, great to see you. Amir, Alan, Francesco, Sergio. God damn, there's a lot of people kind of watching this right now, Simon. I mean, the interesting thing on that, like, say, it is sad when it comes to necessity. But I mean, I always kind of think slightly it's like, kids riding a bike. To start with, they sort of want to know that the stabilizers are there. And then actually after a while, when you've promised not to let go of them, but you've let go of them, then actually they don't realize that they're doing it all on their own.
Is
So
this the
I mean,
bank or is this the users of the bank?
oh, it's my shitty parenting. That's mainly what it is. But I mean, like, is this a set in a sense though? Like, how has the safety net and actually everything to really support customers being able to do, everything that they could really reasonably want to do on a day-to-day basis anyway. I mean, maybe not full-blown mortgage applications or anything like that, but I mean, over in India, we've sort of seen this before, haven't we? With actually when demonetization happened and they took all of the paper currency out of the processes and provided paper currency out of circulation and provided digital payments. I mean, digital adoption like rocketed, didn't it, in terms of there? So, I mean, has the capability to support normal Americans walking around doing their normal American life always been there for the last couple of years? It's just maybe their confidence in using it hasn't been there.
Maybe the lack of confidence, but also the kind of consistency of experience. Your experience with Square Cash and your experience with Venmo is quite different to your local community bank. And actually, especially for vulnerable segments of society who are used to getting their paycheck or their social security check, taking that to a branch or taking that to be cashed, people live in cash, and cash is used primarily by the most vulnerable in society, as well as some less than savvy characters, but overwhelmingly by the vulnerable and the elderly. That's what they know. It's what they're used to. What do they do now, and what experience do they get? And is it going to wear cash for them, or is it going to be something provided by the bank that they've known and trusted for their whole lives? So it's going to be interesting to see that kind of develop. The interesting thing about the India example is you have this very coordinated top-down state, and we're going to pull cash away, and then here's this digital thing that works for everybody. Whereas with the US example, you don't really have that. You have state by state. You have something that's much more commercially driven, something that's much more entrepreneurial in its basis. So it's really on the banks themselves. How are they going to solve some of these problems if a big centralized payments system from the Indian government like UPI and a big centralized identity system like Aadhaar isn't there? What do you do instead? And it's got to be some pretty great digital experiences.
Agree. I mean, I wonder if this actually perversely will really help a lot of the challenges that are over there right now. I mean,
Mm.
some of the guys who are really, bringing in huge amounts of customer bases, but people have been skeptical about them because they've not really. I mean, Chime is a good example. What have they got? 5-6 million customers right now, but fully digital service.
Mm-hmm.
At the point where necessity kicks in, those guys potentially could be, creaming it in from a customer base perspective. But we've got some really funny comments. So Amir, who was doing today's weather report, we don't know what the weather's like outside, dude. We're not leaving the fucking house, all right? So like you've heard the reports. This is not what we're going to be doing. So Chris Hingham though had a good question here. It's like, did you see that bankers have made it onto the list of occupations that schools will still look after their children for in the UK? Do you know what? I hadn't seen that, but that is really interesting. To think that banking is put as one of the things that people will need in these times of crisis essentially is super interesting. So I mean, it probably means that if you're the CEO of a bank right now, then you won't be sort of hibernating with the rest of us. But it'd be interesting to see what happens. I mean, on this, Simon, it feels like I mean, digital. I mean, me and you were at Barclays, I was at Lloyd's. Digital when it first was introduced was done because of cost savings rather than experiential gains, right? It kind of feels
Completely.
like the result of this sort of pandemic will be an undoubted sort of downturn from an economic perspective. I wonder though if to the gist of this report, I wonder if the upshot of this is really accelerated investment in digital banking, because actually I think the demand for it will be even higher, but also the gears towards, I mean, me and you have said this a bunch of times before, it's not just doing it cheaper and doing it better are like not mutually exclusive things. You can do
Mhm.
both of these things if you go about it in the right way. So, I mean, do you think this actually will? Do you think it will slow banks' investment in digital banking, or do you think it potentially could increase it?
So we're in an interesting phase. We're kind of moving into this planned economy or this wartime economy. And I look at everything from car companies producing ventilators to schools looking after bankers' children. We're in a position where banks will be asked to lend to small businesses, even if it's uneconomic, and banks may be asked to lend to consumers who are in distress, even if the government steps in. So they're almost being forced to act in a way that they didn't before. It's now not just a cost-saving business case. And as you say, digital to save cost is really what you end up with is digitized. You try and take that paper process and make it a little bit cheaper by putting robots in the thing. Whereas actually, if you wanted to have an infrastructure that was modern, that was cloud-based, that was microservices, that was always on, that could keep up with the Netflixes of the world and could scale like a true platform business. You can do that, and it doesn't have to cost you billions. You can start a lot smaller, and as a result of being able to start a lot smaller, potentially you could make a business case wash its face a lot quicker. And if there was
Mm,
ever a time to do it, it's when people are potentially struggling, people need loans, people need that new thing that might have been sitting there in the innovation team, that might have been a really interesting idea. Suddenly it becomes not only BAU but mission critical. Things that were sort of there on the shelf suddenly become really important. Could be interesting to
yeah.
watch. It could be really interesting to watch. It doesn't have to mean that better is the enemy of kind of cheap. Better can in fact mean much more affordable if you do it the right way. And as you always say, David, it's not what you do; it's the way you do it.
Absolutely, yeah. I think it's going to be fascinating to see. I mean, there's a few questions sort of popping up about so what happens when the vault door opens and we're allowed out back into the world. Does the landscape shift because of this? Because I guess I mean there's an interesting point by Alan here about we need a government funded service to teach the elderly how to use online services and
Hmm.
provide devices for them who don't have them. I mean, it's almost like the truly sort of disconnected people right now. I mean, I've heard lots of stories of people setting up iPads for their mum through the window rather than actually sort of going in and doing things. We've gone around my mum's and put milk outside the door for her to go and get things. So the sort of older people and the vulnerable do really sort of risk being isolated. So it's an interesting service that people are starting to sort of provide, really. But I mean, I honestly think, though, I do believe that this will be I mean, in a lot of times, people have really sort of seen crisis as like the end. But definitely, like we saw with 2008, it was sort of really the beginning, right? So I
Hmm.
think with the opportunities that are sort of coming through, with the ability for people to kind of look for opportunities to really provide support to people, and actually then to your point earlier on, for the public to realize that actually they've all along had these services that could allow them to do the things that they needed to. If I was a big challenger bank in the US right now, I think I'd be quite hopeful that you could deliver service to people in a way that the big organizations hadn't. I mean, how do the big banks kind of respond at this point? Because if some of them, I know, particularly somebody like Chase has got a pretty decent array of digital services, but not
Hmm.
all of them do. Um, So for those who don't have, full onboarding processes, or for in a situation where, their servicing is not really fully up to speed with everything from a digital perspective, and this is probably not the big banks, but tier two and tier three within the US,
Mhm.
the community banks, to your point earlier on. I mean, how do they really sort of adapt to this? Is there a transition between, stop coming into our branches, but pick up the phone? Okay, stop picking up the phone because we've got a mobile app. Like, how do you sort of transition people through that? Because I mean, to a certain degree, if you look at what's happened in the UK, I mean, First Direct is always a really good or bad example depending on which way you want to look at it. But I mean, they've sort of conditioned users to expect the best service via this one channel, and
Mhm.
actually have struggled to get people to move beyond that because maybe they just haven't given them a good enough reason. But do you think it's going to accelerate evolution, I guess?
Yeah, well, so you can give great service via any channel, right? I think First Direct is interesting because they gave amazing service via the telephone and never had any branches, but that service was amazing. So amazing service is amazing service, and you can be really human and really empathetic and really help people with loneliness, help people with via system have to be. So you find yourself in this interesting spot where how would you serve them if you could only serve them digitally? And people start having to get creative. I saw an article about Chase has closed 1,000 branches, but they have, as you say, reasonable digital onboarding. But you'd look at a lot of the main banks, and if you don't already have the mobile app or don't already have a digital service, if signing up for that is something that you or I would struggle with, and we live and work in banking and we'd give up and get frustrated, then what are the elderly going to do? What are the vulnerable in communities going to do? What are people with kind of learning difficulties going to do? How are they going to be able to do this themselves if it's hard anyway?
Mm.
It forces people to think about design of digital in a way where it's not just I'm going to do this for the sake of doing it, or I'm going to do it to save a little bit of cost because these young people do it and because the other banks did it. It's the new BAU. So onboarding work. How does your can I actually sign up for products in this thing, or can I just view what I've already got? And can I make payments and move money back and forth? The amount of cost that goes into plumbing into the back end infrastructure often means that having an app means like tick job done. We've got an app now. We've done digital. We're kind of fine, but surely there's more to it than that. So I think there's some real opportunities there, and there's a bunch of ways to get started.
I mean, it's interesting. Processes have been created for, plain sailing, haven't they? And, most of
Yeah.
the banks kind of, the emergency processes are sort of quite lacking. I mean, not just on a retail base perspective, but actually with businesses as well. For anybody who's seen, we've had a new CFO join, Joe Wright, and actually just getting her access to the bank account is just a force of, sheer determination, quite frankly. It's like, we'll send you a dongle and it'll be with you in 4 to 6 weeks, and it's like, yeah, but like, probably payroll needs to continue. So actually all of the processes that are in place in these organizations are predominantly based for a time when you can leave your house, you can go to a branch. I mean, even the announcement, great announcement from the UK government this week with, was it 330 billion of kind of opportunities?
Mhm.
But the advice was, from Monday, you can walk into a high street branch and talk to people about a loan. And I'm like, you're literally not allowing us to do that. So,
Yeah.
at that point, if you love your startup, you've got to put it above your health, which is an
Which is
interesting sort of
probably
trade-off.
not good. And look, all of these things seem great until they have to be digital and people haven't done them before. And then suddenly, the people that have done them digitally, everybody looks at that and goes, "Oh, wait, so you mean I can be 100% of the service digitally, and I can do 100% digital onboarding?" And yes, you can. And so there's an interesting question about, if the governments of the world in the US and Europe are now starting to look at ensuring and backstopping lending to small businesses to make sure that they keep going in difficult times, how should that money be lent? You can't walk into a branch anymore. So, what does that process look like? And how will you know that that government money was really spent on that loan? What's that traceability all going to look like? There's some really interesting challenges in that space. And it forces you, I think, to get the onboarding right, to get the experience right. I was talking to one of our clients recently, who's saying that they've been spending 6 years trying to get remote working to work properly, and in that 6 years they'd had issues with the technology and the people, and apparently nobody wanted it apart from the few people in the corner who like digital. They wanted to be able to work remote. And in 6 days, they had half of their staff working remote. And it's amazing how it takes a crisis to concentrate minds. It's a shame how it takes a crisis to concentrate minds. But you end up in this sort of almost wartime economy where suddenly radar appears and a Turing machine appears, and now all of these things that were impossible to do before are doable because they're a necessity. And actually, banks at their best play a crucial role in society, which is to keep people afloat. Let's not underestimate the fact that people are really struggling out there right now, and unless the banks can support them, we could be in for a real sort of 1930s style Great Depression. And the banks could potentially keep businesses alive, could keep people afloat. The government is stepping in. But if you can't get that money to those people, if that lending actually can't happen, it doesn't matter how much the government's willing to pony up. This stuff has to happen quickly.
Yeah, some really interesting questions come through. Benjamin Enser came through with, are existing credit rating models now completely redundant? I mean, that's a really interesting. I mean, a lot of those models are based on people, carrying about their day-to-day lives with transactions and lending and repayment of
Mm-hmm.
loans and mortgages and all sorts of stuff. So the idea that actually most of those things are going to be put on hold for a period of time, it will definitely be a blip. But I guess it's going to be a blip for everybody at that stage, isn't it? So you would have thought the credit agencies would do a good enough job of really sort of managing, smoothing out that weird anomaly in 2020, essentially. What do you think?
Yeah, as the market turns, where credit worthiness is moves. So yeah, it's going to be interesting to watch that for sure. The way in which credit is decided in banks is really interesting as well. Like the credit committee process in most organizations is this idea that there's going to be every now and then we're going to review the impairments, which is the losses from loans, and then we're going to look at what caused those losses, and then the group we're going to come together in a physical location and we're going to have a big conference call. Then we're going to alter our spreadsheet models, which alter our credit scoring. And yeah, sort of auto decisioning has been around in the credit world for 10, 15 years, maybe more. This idea that above a certain credit score, we just automatically let you have a loan. But what if you had a great credit score before the crisis and now you don't? What if because the supply chain's frozen up, you have no products to be able to sell? You're still a good business. What if you work in retail, you have a job guaranteed, but they've asked you to take some unpaid leave?
Yeah. Yeah, it's going to be really difficult for a lot of people to navigate that one. I mean, James York has come in with the question that I was expecting somebody to drop in a lot earlier. Is like, is this not surely crypto's moment? From a global
Mm-hmm.
perspective of the need of almost a global reset button on capitalism, is it time for Bancor? What do you think? I'm sure, Simon. I mean, we've only got another 5 minutes, but I'm sure you could go for another like 3 hours on that one. But what do you think? Is this crypto's moment?
So interestingly, the crisis of crypto crashed in the last couple of weeks with the market. So we covered this a lot on Blockchain Insider, which is available on iTunes now. And part of the reason for that is, why would crypto crash when surely Bitcoin is for the apocalypse, right? Like that's what you want when the apocalypse comes. And this looks a bit apocalyptic, so Bitcoin. The problem is when uh, a crash comes, people on Wall Street, especially in hedge funds, look to sell the thing that's easiest to sell so that they can take that cash from the things that was easy to sell and put it behind all of the things that they might get margin calls against. In other words, they're betting that the price of something will go up. And because the price of it has gone down, they have to find some cash to cover their margin call from where they've borrowed the money. So what do? Well, you sell things that are easy to sell, and things that are easy to sell are gold and Bitcoin. So you get rid of those really quickly, and then you can look after your positions. And we saw the same in 2008 with gold. If you look at what happened with gold, it sort of did this, and then poof, took off to the races. So we might see something similar. Bitcoin as the hedge against deflationary currencies and money printing. And there's never been more money printing that's happening right now. So, hey, who knows? Not financial advice. Do your own research. But it's going to be an interesting one to watch with crypto for sure. I don't know if this is its moment, but it's certainly a moment where people will look at it a little bit differently and go, maybe the way we've been doing monetary policy isn't the only answer. Maybe there are different answers out there.
I mean, there was a point made. So Dan Feehenny, which I probably just murdered your name there, Dan. Sorry for that. But actually, there's a need now for like real leadership from the FCA and the Bank of England, particularly. I think both of them have come out pretty strong this week in terms of actually what they're saying. What they're saying is important, but also I actually think we're going to see a period of a lot closer collaboration between the Bank of England and the FCA, if I'm honest with you, given the former CEO of the FCA moved over to be the governor of the Bank of England, and with Chris Woolard stepping up to CEO at the FCA, then actually it feels like actually they've got really strong leadership that will be collaborating rather than competing for a change, which is awesome. So I mean, leaving the last point here, probably Ryan Garner's just dropped a point. Ryan Garner from 11FS on the comments. So a key post-pandemic shift from my perspective is truly digital banking becomes expected. Brands that align to the zeitgeist after the pandemic will be the ones who differentiate. For example, banks that support communities with win-win-win business models that are circular and look after the planet. I think that's probably a pretty decent place to leave it, isn't it, Simon?
As always, Ryan is far smarter than either of us. Shout out to Ryan Garner. Yes, absolutely.
All right, it's top of the hour, guys. I've got some work to go get done. I hope this was helpful for you this morning, and we'll see you again tomorrow morning.